Hello guys, it's Stock Trader Max here and welcome to another video where today we're going to be talking about the markets at the start of this brand new trading week. Now, first of all, apologies for not posting a video on Friday. I was traveling from Dubai back down to London, so obviously there will be the occasional couple of days a month when I am traveling, so I won't be able to post a video. But don't worry, if I don't post a video, it's just obviously because I am traveling. So thank you for your patience, but I'm back, and tomorrow I'm actually going away on a cruise for 2 weeks. I'm going to try my best to post videos out whilst I'm away on holiday with my family, but obviously it just depends on the Wi-Fi connection. But I will definitely do everything I can to make sure I get daily videos out to you all. But let's get started here with the economic calendar as we start this new trading week. Lots of data due out, starting off from today where we get the Chicago PMI. Then we have the ISM manufacturing PMI numbers tomorrow, followed by the ADP non-farm payrolls. On Thursday, obviously, we have the initial jobless claims. We have some more ISM non-manufacturing PMI. So lots of manufacturing inflation data. And then also on Friday is the big one. We build up to the non-farm payrolls, and that's going to be crucial. And the market is going to be very heavily focused on that figure. Any signs of a deterioration in the jobs market will be very worrying for the market, for the Fed, and will likely result in a very sharp cut of interest rates moving forward. But you don't really want to see that. Yes, we want interest rates to come down, but ultimately we want a strong economy, and we want a strong consumer, and a strong labor market does it mean that you will likely get a strong consumer. So hopefully that does come roughly in line. But let's get started here with the S&P 500 trading down ever so slightly for the day, 5,726. I still believe that we work our way up towards 6,000 in the coming weeks ahead, or the months ahead, as we work into we work our way into the end of the year. It's in my own humble opinion that we're currently within this third wave, which is a measured move up towards 6,000 before we might see some consolidation in Q1 2025 before that final push up towards 6,300. That likely comes within the first half of 2025. So I really like the setup here. I still believe we've got a long way to go towards the upside before we have any major correction. We're in the early stages of this AI revolution, and I really do believe that both technically and fundamentally we look quite strong here. Moving over to the Nasdaq 100, similar to the S&P 500, I think that we are within this third wave. I actually like the Nasdaq 100 setup better than the S&P 500, and that's just simply because we are still not trading at an all-time high. S&P and the Dow Jones 30 are currently at all new time highs, where the Nasdaq 100 in terms of percentage perspective is still roughly 4% off its all-time high. So I think that within the next couple of weeks we will see an outperformance from the technology sector, which will then enable the Nasdaq 100 to trade sharply higher up towards, let's say, 22,000 before we complete this third wave and perhaps see any consolidation going into the US election. And then obviously the Dow Jones 30, as I mentioned, we continue to achieve new all-time highs. We achieved a new intraday all-time high back on Friday. Today we have started off the week with a little bit of weakness, but with the markets opening at any minute now, actually, they just opened two minutes ago, then I do expect this market to ultimately recover. Finally, if we just have a look at Bitcoin, slight rejection today, 64,000. If I just put it in the daily chart, you'll see that we have started this final trading session of September with some weakness, but ultimately I am really bullish for Bitcoin, because September, historically speaking, is the weakest month, but we have actually managed to finish the month up around 8.5% if we were to close today's trading session at current prices. So it's been a very, very strong month, and history will tell you that when September has actually been a positive month, then you typically get a positive Q4 every single month. From October all the way through until year end, you do start to see some positive returns on a monthly basis. So Q4, the average move higher in Bitcoin in Q4 is 88.4%, which takes you to $124,000. That's a 3-month move. So, but come New Year's Day, we could be seeing Bitcoin trading at $124,000, which seems crazy to think, but it's very, very true. And all we would need really is history to kind of repeat itself. So slight rejection to start off this week, but I am very hopeful that we can recover these losses and break out of this holding pattern that we've been trading in since we hit that all-time high up at around 74,000 back on the 14th of March. So the breakout is coming. I'm very excited. I think we just need to start Q4, and that's when we will really start to see a follow through towards the upside here for the crypto assets. That's going to wrap it up for today's video, guys. Don't forget, if you want to join the Signal Group, then make sure you visit my website, dailymarketmovements.com. That will give you access to the Investors Lounge as well as your educational hub. Charge a very small fee of $29. But thank you very much for tuning in for today's video, and I will try my best to post out a video tomorrow once I'm on this cruise.